So welcome to another day, and today I'm going to take you guys through your motor private insurance policy. And your motor private insurance policy is covered sorry, your motor private insurance policy is divided into different sections, and you need to understand your policy document anytime you receive it from the insurance company or anytime you demand it from the insurance company. Now, of course, there's the introduction bit showing you the policy and the introduction part welcoming you to your policy, and then this bit you get the definitions of what is of the jargon that you're going to come across in your insurance policy. Like, for example, accident is a sudden, unplanned, and unforeseen mishap not under your control or that of the authorized driver mishap. Okay, so certificate of insurance is also defined there. What is a claim? What is an excess? The first amount of each claim borne by you. So all these terms, if you read them through, you're going to meet them in your insurance policy. You're going to understand what is the meaning of a policy, a period of insurance, pre-accident value, third party, what is a vehicle, so all that. Now I just want to jump to the sections so that we do this video fast and quick. Now, section 1 of your insurance policy covers the vehicle, and if you're taking comprehensive insurance policy, you need to understand that all sections of the policy applies. But if you're taking third party only cover, section 1 of your policy doesn't apply, because section 1 of the policy strictly deals with the insurance of the vehicle. And for third party covers, third party does not cover the vehicle. Third party only covers liability towards third party, life, bodily injury, and property damage. So what is covered under section 1 is number 1, loss or damage to the vehicle. Number 2, financial interest. By this I mean, for example, if you taken a vehicle on hire purchase, you bought it on hire purchase, or you bought it on bank finance, the financial interest, that entity, the bank or the showroom, is the financier, so the interest is covered in the policy under section 1. Number 3, protection, recovery, and removal of an accident. You may get involved in an accident and you need to maybe tow your vehicle, or you maybe to store it in some place for a period of time before it is moved to the garage. So you find that one is covered up to a limit of 30,000 Kenyan shillings in most standard insurance policies. And then there's also number 4, what is covered is authority to repair. And this simply means that you may authorize the repair of the vehicle necessitated by damage for which we may be liable under this policy, provided that the cost of such repairs does not exceed the authorized repair limit as shown in the schedule. So they normally cap it at maybe 30 or 50 or 75 or 100, depending on how you negotiate at the onset of your insurance policy, before at the quotation stage when taking your insurance cover. Now, so authority to repair your car. So you may repair your car in case you, for example, you may have an accident somewhere, maybe in Lodwar there, and you're far from your insurance company, and so it will be hard for you to move to Nairobi. So you just repair your vehicle, and then you get the necessary receipts, and then you proceed the journey, and then you're going to claim in Nairobi. Now, what is not covered under section 1 is so these ones you'll just read through, and in case you have any questions, you can feel free to talk to me on phone on 0727 49 79 35. And what is not covered in section 1, for example, consequential loss, loss arising from another loss, depreciation, wear and tear, mechanical, electrical, or electronic breakdown failures or breakages. Your insurance policy does not cover wear and tear, mechanical, electrical, or electronic breakdown. So some of the things that, for example, mechanical damage is part of normal daily use of your car. So that one, in case you need to do service or you get a mechanical breakdown, that one is not covered by your insurance company, simply because it is not accidental in nature. It is not unforeseen in nature, you see. So it needs to be not planned for it to be covered by insurance. It needs to be a misfortune. So damage to tires unless damage is caused to other parts of the vehicle at the same time. And of course, your tires are not covered by your insurance policy unless an accident occurred and they're damaged or lost. So that one is covered. So damage caused by overload or strain is not covered. Do not overload your vehicle. The excess stated in the schedule. So in an insurance policy, there's normally an excess, the first part of a loss that you have to bear as the insured, and that one is not covered. So you have to pay the excess before you're indemnified. So section 2 now deals with liability to third parties, and so this is the most important bit in insurance, and this is the sole reason why the government has made insurance a mandatory requirement by Kenyan law as per the Traffic Act. So the government is normally not concerned about your comprehensive insurance. They're just concerned about the third party liability bit, because as long as you're using any road in Kenya, you need to have a minimum of that party insurance cover. Now, this section 2 covers indemnity to you or your authorized driver or any person in or getting into or out of the vehicle. So if you're using the car and then you happen to maybe hit somebody and they get injured or die, the liability bit is covered, because such cases normally go to court, and awards are court settlements and awards are given by judges and magistrates. And damage to property, you may be driving and then you hit somebody's wall, and that the liability bit is also covered under that. You may be forced to pay them, and the insurance company will pay you up to the specified amount in the policy. So for the limits of liability there, it's quite expansive. For example, for death or bodily injury to any one person, the limit is normally capped at 3 million for the standard policy, and you can negotiate it to 5 million, or you can pay extra premium and get maybe 10 million, depending on how much the insurance company can hold or can accommodate as per their insurers. So damage to property, that one is covered under section 2 as a third party liability. Indemnity to legal representatives. Of course, your legal representatives are also provided for indemnity in the policy. You need to read that. Following the death of any person covered under this policy, will indemnify that person's legal representatives for liability. You may die, and maybe you died in the process of in an accident, and of course your next of kin may be taken to court under your motor insurance policy, so they are represented in the policy. That is just an example I'm giving you, but lawyers can give better examples because they do this every day. Applications of limits of liability. In the event of an accident involving indemnity under this section to more than one person, the limits of liability will apply to the total amount of indemnity to all persons indemnified, and such indemnity will apply in priority to you. So the limits of indemnity, they're capped. You see, so liability is not open. Your insurance policy does not give you an open, unlimited cover. They're normally capped. So I will share the limits of liability later on in a video. So representation and defense, of course, the insurance company as the second party normally takes over and will represent you in all court matters. So what is not covered under section 2 is death of or bodily injury to any person in your employment. So if you have people in your employment, anybody in your employment must be covered under WIBA policy. They can't be covered under your motor private policy. Your workers can only be covered under Workmen Insurance Benefit Act policy. Exactly, yeah. Number B, what is not covered again, for damage to property held in your trust, custody or control or belonging to you or any member of your household. For damage to property held in trust, custody or control or belonging to any person claiming to be indemnified under subsection 1. So this one normally means that if you're holding goods, or if you have maybe you're holding stuff on behalf of other people, that one is not covered under section 2. It doesn't sum up as liability. So if you're and there's an important clause, limitation to use clause. So it means that you need to use your car for the right use. If you have a private car, you cannot use it to do business. So if you want goods belonging to third parties to be covered, you need to get a motor general cartage insurance policy. So that one simply means that you're carrying goods for hire or reward. Yani your vehicle is going to be used for hire or reward. So you need to get such a cover. And section 3, emergency medical expenses. You may hit somebody and they get injured and you have to treat them. So that one is capped at normally 30,000 Kenya shillings. Or you yourself also may get involved in an accident and you... Sorry. That one, no. Sorry. You are not covered under your insurance policy. No. So this one applies to third party persons only. If you get injured, you sort yourself. You're supposed to have a personal accident insurance policy for yourself. So this one, emergency medical expenses, applies in case you hit or injure third parties. So section 4 of your policy, vehicle in custody of motor trader or other motor vehicle service providers. You may give out your vehicle maybe for servicing to a registered garage like AA, or for valuation or test drive. So in cases whereby it gets involved in an accident, it is covered while it is in their possession. So there's also jurisdiction clause that you need to understand. So this is just payment under this policy will only apply in respect of judgments which are not in the first instance delivered by or obtained from a court of competent jurisdiction within the territorial limits. So the jurisdiction clause is Kenya. All judgments and requests for compensation have to be made in a court of law in Kenya. Avoidance of certain terms and rights of recovery. That is technical. You need to just read it and then you can call me. I will explain that. It's long and I need to explain it. I can't do it right now on this short video. And then on page 8 of your insurance policy, you normally get general exceptions. Now, these general exceptions apply to all sections of the policy. You see, so it normally just says all the exceptions that are not covered. So this is the most important bit, guys. Hapa ndo unapoteanga. This is the bit whereby you need to know what you can buy back in your policy and what you can't buy back. You see, so this part is very, very much important. You see, like just read and you're going to understand. So this copy of your motor private policy is available through the IRA website. You can just Google motor private policy Kenya PDF. You go for the one from the IRA website. It's standard across all insurance companies unless they modify it to suit their customers, but it is standard all across. So you also have conditions, your duty. You have a duty of care, your communication of changes. In case you have any changes in your motor policy, you're supposed to communicate to your insurance company. You have a duty of care. You will ensure that the vehicle are at all times in roadworthy condition. Take all other reasonable steps to prevent accidents, injuries, loss or damage. Allow the insurance company access at any reasonable time to examine the vehicle and all that. Vitu kama hizo. You see? So it also gives you a procedure of reporting your claims. If you must report to us any accident, injury, loss or damage involving your vehicle as soon as is reasonably possible. If the vehicle is loss or damage as a result of theft, attempted theft or malicious damage, you must immediately make a report to the police and obtain a police abstract. So that one gives you a procedure of the claims. So there's also the average clause. I've done a video about this on my YouTube and also on my Twitter. You can just search average clause or just search using those keywords and you're going to get a video on that. So it simply means that do not underinsure your car. If you underinsure your car, average is going to apply in case of an accident. Or yeah, exactly. So I'll repost that video again of average and I'll share it again on my YouTube channel. Now, other insurances, if any loss, damage or liability covered by this insurance is also covered by any other insurance, we will pay only our share of any claim. This condition does not apply to personal accident benefits. So, but these days, this one is not possible because with the digital certificates, it's impossible for you to have double insurance. Unless the system just goes haywire. But these days, it's impossible to have double insurance. But during the old days, it was impossible. It was possible for somebody to two types of insurance cover on one vehicle because the certificates were manual. But these days it is system fed. The chassis number locks out in case you try taking insurance with that same chassis number. Yes, exactly. Yeah. So fraud, do not commit fraud. If any claim is found to be fraudulent and you or anyone acting on your behalf has given us any false documents or information, you will lose any rights under this policy. We may refer such cases to the law enforcers. Self-explanatory, guys. Complaints, there's a procedure of handling complaints in the policy. There, you can report to IRA in case you feel that the insurance company is not listening to you well. And then there's also how you handle disputes between you and the insurance company. It's there. Cancellation, the insurance company may cancel your policy by giving you 14 days written notice, and you may cancel your policy at any time by informing the insurance company and returning the original and duplicate certificate of insurance. That was kitambo, but these days you just notify them in writing, and then you cancel. You have the insurance company cancel the certificate for you, and then the vehicle will be free to be insured elsewhere. So now the clauses here. You have the young and or inexperienced driver's excess. It's normally capped at 7,500 Kenya shillings on the motor private policy. So in case a young driver or an inexperienced driver causes an accident, you have to pay an excess of 7,500 before anything happens on that policy. You see, so exactly, yeah. So replacement parts clause, you need to also read that. I've done a video on that. You find that some vehicle parts are rare, and the cost of replacing those parts may be high on the insurance company, so they may choose to give you the money you check for those parts alone. Exactly, yeah. So if you just let me just take you through a quick one. In the event of loss or damage to the vehicle or its accessories or spare parts necessitating the supply of a part not obtainable from stock sale in the country in which the vehicle is held for repair, or in the event we exercise the option under section 1 to pay in cash. You see what I've just said. The amount of the loss or damage, our liability in respect of any part will be limited to the price quoted in the latest catalog or price list issued by the manufacturer. So long story cut short, it simply means that if they're finding it hard getting a spare part, they're simply just going to ask for the price in the market, and then they're going to give you money to sort yourself out. Exactly, yeah. So windscreen and window glass is covered, of course, for free, up to 30,000 Kenya shillings in a standard policy, but you can enhance that, and also the type of vehicle that you're driving matters a lot. You find that if you're driving a Harrier, the windscreen is around 80,000 Kenya shillings. So if your policy gives you a limit of 30K, it means you have to cover the extra 50,000 Kenya shillings. So you cover that by paying an additional premium, normally charge at 10% of the extra amount. So if your windscreen is 80K and the limit is 30K, you will do 50,000 times 10%, and then you're going to pay an additional 5,000 to cover the whole windscreen in full. So premium financing, that one states on how you deal with IPF. It's another long one that I have to do a video on. No claims discount. This one I don't think it's there these days. It's no longer given by insurance companies because of competition in the insurance market. No one is going to give discounts below profits they can make. And so important notes, the market value, you must do a valuation. The value provided for in the valuation report is your market value. So the value, the amount you give the insurance company to insure your vehicle is the estimated value. So the buying price is the estimated value, but once a valuation report is done, it gives you the market value. So your attention is drawn to the importance of ensuring that the market value of each vehicle is covered by the amount shown on the policy to avoid under or over insurance. You see, if you estimate the value of your car, you may underinsure it or you may overinsure it. So if you overinsure, you lose premium. If you underinsure, average applies in case of a claim. So admission of liability, do not admit liability in case of an accident. Transfer of ownership, cancellation of policy, very, very much important, guys. Anytime you sell your car, do a logbook transfer, and then cancel your certificate, and then hand over the car, because insurance contracts are between the first party and the second party, so another person cannot take over your insurance cover. So you cannot sell your car together with the insurance attached to it, because the logbook is the proof of ownership now, and once you sell your car, it means the logbook is no longer yours. So once you do the transfer, the logbook belongs to another person. Exactly. So it has been a long video, apologies for that, but you can call us on 0705030596 in case you have any questions, and I'll be glad to assist going forward. So I hope you learned a bit about your motor private insurance policy, and you can call us anytime from 7 a.m. to 10 p.m. and we'll be glad to share more insight regarding your insurance policy. Thank you.